Boom, 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 boom. I'm going to turn that down. I've got to go and hit Active Trader Pro, Properties. Where is Active Trader Pro? There it is. Boom, 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 boom. And it's going to crash. I mean, I just got 2 Windows warnings there. But we're going to go mainly back to the big cam. I don't know. I seem very ashy. It's crappy light in here, but let me see. Let me see if I can change this. That's a little better. That's a little blue. Oh, it's brighter. Let's see. That's as bright as it'll go. That's a little bluish. Morning, Brittany bitch. That's blue. We'll do this color. Why not? Why not? Trust. There's my thing. Hit the thumbs up button. Like always. Brendan, you've been driving truck, I think, lately. I haven't seen you in a while. Live, at least. I get your comments. IONQ. It popped. Let's see. The SPY still hasn't turned over. IONQ. Oh, I have to do SPY. SPY and QQQ supports. Okay, thumbs up. Why do I have to keep hitting thumbs up? I don't know why. IONQ is up 5.85%. Daily stock pick. Substack.com. Savvy Trader. 2 portfolios. And the trading portfolio continues to go down. Core portfolio continues to go down. IONQ is going to pop up to 1507. Up in this area. I think you've got, I mean, here's the thing. You pop up, if you do pop up here, I mean, that's kind of like this earnings going down and then going up right before the earnings, and then the earnings justify it. But I mean, if you just used this algorithm, you've made 502%. Jeez, 502% over 24 months versus 43% on the actual asset. I mean, let's just take a look at a good monthly. It hasn't been that long, so let's go weekly. I mean, if you look at the IPO, I mean, this is a $35 high. So, I mean, it's extended on that MACD. I mean, that MACD is super, super high. Hey, VRO. On your birthday, I'm doing AMC. I'll do like a 5-minute special podcast on AMC for you. Let's do this. AMC. Oh, wow. NVIDIA is continuing to drop. I thought 440 was the end of it. It's down another 2%. I mean, here's the thing. Let's be honest. That PPI report that just came out kind of shows we're in for more hurt. I thought, but here, it's kind of mixed. Okay, so PPI is still going up. It's higher than expected. So bond rates kind of popped. But year over year, it's got a 2 handle on it. And that's what the Fed wants. I can go into more detail after when I do the podcast. But yeah, it's a little bit. Let me check my audio mixer. I don't know why. Audio input capture 2. Yeti microphone. Let me see. Properties, Yeti microphone. Huh. Is it doing 2? Don't know. Let's look at, we're going to do small boy stuff. We're going to do some scans. Brokerage holdings. I've had 2 power outages this morning. It is currently 73 degrees outside too, it says, which is kind of crazy. Okay, want to throw salt on a wound? You know what just got a cross up? Sedge. I said it yesterday. Oh, does it have audio echo? Hold on. Sedge. I said it yesterday. Oh, does it have audio echo? I don't hear audio echo. Happy Friday, Scott. You know, I have a feeling Sedge is going to be one of those that I will be interviewed on a Netflix documentary about how I played that one so well. Hell no. Okay. Yeah, I didn't hear any audio echo. I just turned the sound up. SLB, we went over this one yesterday. Great company. Energy Transfer, NXLE. Energy Transfer is a $13 stock. This one just dipped down to $12.79. It is down 2% in the pre-market. Take advantage of a weak energy trade today. This one in particular is trading well over the 200-day, but I can tell you, you go into FinViz and it is doing well. SMCI, let's see. Does SMCI, did it turn? It's down 1% to 273. You're kind of putting in that little shelf there. The only reason I have not bought SMCI, I think it's still worth it. The only reason is that that gap. That gap right there, it scares the F out of me. You've got this volume shelf at 221 that should provide some pretty good. Let's go back. This is the previous earnings. So that volume shelf there between 223 and 228 should provide a good level of support if this doesn't build out. If this builds out, then we're good. But look, 29 million shares are held down here. That's huge. I'll take a look at AMSC, but let me just make sure I've got these scans done. Do an energy levered ETFs. Let's see if any levered ETFs crossed up. I need to start a scan with cross down as well to make sure that people get out, because that's wow. Tech is getting killed again today. Low cost Vanguard, nothing in that. Spider sectors. Oh, let's talk about, this is what I want to talk about too. Twitter. And I'm going to look at TQQQ. Yeah. That's what it, here. If you want to see what, remember yesterday everything was super strong, inflation data, you know what? We're going to see, no more rate increases, so all of a sudden risk on assets. TQQQ got up here yesterday to 41.75, And it just made a complete round trip down under 40. So I still think under 40 is a good one. This is good. Hold on. I'm watching the guy couldn't be caught. Let's see. This is good. Oh. And he runs. Oh, he's still not caught. Let's see. Profile. I need to follow 1,000 Ways to Die, although they just freak me out all the time. Dan Ushman. Here we go. Okay, I'll go over my Twitter feed. Read the monkey responses. Oh, okay. I gotta get that up. Your podcast. Let's see. Interact. See responses. Okay. We will go over all the monkey responses from yesterday. I'll read everybody's name. And let's see, we were on some scans. Spider sectors, XLE is the only one that crossed up. Let's do the Dow. And then we'll do Jesus, that's no joke. That's a don't you have to take apart the entire freaking engine for the water pump kind of thing? I don't know anything about cars. I mean, honestly, I know nothing about cars. Shit, the air filter needs to be changed in my Tesla. I'm just calling Tesla, paying the $80. Lucid. No. Marriott. I'm going to put that in. Let's go S&P 100. Southern Company. BMY. AMT. Honeywell. Okay, we got it. Electric is easy because, I mean, shit. What have I don't think I've spent anything. Geez, a rear engine coolant? I don't even know what that is, but that's... is it inappropriate to laugh? Rear engine? Bada bing, bada boom. I'm gonna hit you in the rear engine. Bada bing, bada... AMSC. Let's see. What is this crap that you're telling me to look at? American Superconductor Corporation. It's got to be a microcap. It's done well. I mean, 35%, you're out. Earnings lost 8 cents, significantly less. They're down 3% in pre-market, down to 933. AMSC, let's see. $272 million net market cap. I mean, this is just so small. $35 million loss. They don't have any cash on hand. Shares out floating, 30 million shares. Average target price is $9.67. June 3rd was the last one with a $10 price. I mean, the rest of it sucks. So $10 is your price target, essentially. Earnings call. Let's see what the FinTwit says. I'm going to buy me some AM942, like it, but may be able to buy cheaper. Yeah. Unusual options to take in. Alerted on the $10 put, expiring 8/18. August 11th. Thank you, each and every one of my 850 followers. Kiss you all for the example face. Disney puts meow. We will see $16 again. I just love buying at the top. Relative volume. Stay tuned for more deals. Dan and Reg. It's been hundreds, I think, between staff with Exelon and other utilities outside that are very curious about how they get one for themselves. I think we have learned from the rollout of other products on the grid. It's very important. I know nothing about this. By the way, if you have not Googled and looked up the room temperature superconductor material, it will bring you down a rabbit hole. That is so much fun. From looking at a video in what looks to be a torture room, about how this material like cracked or something and then just became this super material. And ASMC, I'd be a little bit curious about the sales. It's not a lot, but with this small micro cap of a stock, those dollar amounts at 400,000, 200,000, that seems like a lot from the president and CEO, specifically. Because they were buying at $349, it looks like in December. It looks like they sold a good amount of it. They didn't buy as much in December at $3, but they're selling, more at $6. Kind of read into it a little, but here's the thing that you have to know about Brandon, and I have done that rabbit hole. I listened to last week's All In podcast, and they were talking about it. And it was the first thing on the show. I listened to it, and then I went down the rabbit hole. That material, A, it's not confirmed that the material actually exists. B, it's not confirmed that it can be replicated. Remember, these guys did this in 1996, I think, or 1998, somewhere in that neighborhood, years ago. And it took them this long to replicate it, if they did replicate it, because it's not peer-reviewed. Nobody else has seen the material. People have done it, tried to replicate it, and they said they've done it, but nobody's had it peer-reviewed. The other thing about it, the other thing about it is that it would take decades, if not centuries, for a material like that to actually work its way into infrastructure. And if you don't know what a room temperature superconductor could do, essentially, I think 60%. If you look up at the overhead wires, 60% of the energy that we produce actually gets wasted from transmission. It's either lost out into the environment or it is taken up by friction or some other type of cooling. Like, for instance, in order to have all of these great server rooms, you have to cool it. Well, if this material actually has no friction and has no heat generation, you could literally line roadways and use magnets and travel in a car that has no energy, needs no energy. You could do computing with no cooling, which would, you could basically line a house or a wall, and change the temperature, and the wall will change the temperature, and you don't use any energy. So UCO is one of those things. I've lost, and T-Dog, I've lost a lot of money on UCO over the years. So I don't want to tell you, is it too late to get in there? Because I have taken that risk. I don't think it's too late in getting in there because, and here's the way I look at it. And remember, I'm a douche on the internet who is not an oil expert. If you want to get exposure to energy, UCO is not the way to do it. UCO is basically a trading tool. It is a gambling tool. 100%, it is a gambling tool. It is not anything more than a gamble. But crude oil is at $83. The Saudis are pulling back. Ooh, look at this. Motive Care. Oh, look at VRT. Veritiv Holdings, electrical equipment. They sold $698 million worth. Double Verify, DNB. So I don't think that it's too late to get into UCO, because if you look, the weekly, you're really just touching the 200-day. And I want to say that 200-day is going to be resistance. So it's going to be hard to get anything other than, if it sustains itself, then you're going to see it probably come up to this gap at 56. But here's the thing. I mean, if we just pull this back, look at how many times UCO over the years has gotten over the 200-day. It's been 1, 2, 3, 4, 5, 6. And we're all the way back to 2011. So what's that? 22 years? I'd probably put your money into an asset like Exxon, MPLX, PXD. I mean, some of those are even stretched. The problem with energy and getting into it right now is that, it's the hot buzzword. I don't think it's crazy to get into it, but you got to have a long-term view. And by long-term, I mean 6 months. And for me, in energy, that's a long-term view. I mean, Exxon, I bought in freaking 2021 at 43, I think. Let's see. I know I bought it, between $30 and $40, a bunch. And I've held on to it for a very long time. I think, yeah. It was back here in January 20. Must have been 2020. Maybe it was November 2020. USO is just a non-levered. USO is just United States Oil, and it's non-levered. But UCO is levered. So, T-Dog, for me, you're on a Friday. Don't buy a triple levered ETF on a Friday, because you don't know what's going to go on the weekend. I just don't think that is worth the risk. And remember, we all have different risk tolerances. I preach that all the time. But I wouldn't buy a particular triple levered ETF on a Friday. That would be kind of, for me, outside of my risk zone. And I'm probably higher risk than most when it comes to stocks. So, SPY, here's the thing about SPY. I think I posted this yesterday. Where did I post it? There's all my Venmo stuff. I must have posted it. Did I post it on the newsletter? Hold on. Yeah, here. I posted this yesterday. The gap was created up with last month's CPI move. We just got back to that point last night and bounced up with today's move. So you bounced up. I'm going to keep that up. Why not? And we're going to go back to... Yeah, T-Dog, I will, ding myself if for some reason it flies up, say, a Russian oil tanker blows up or something. Then you're looking at, a pretty big move higher because supply will go down. But I just don't. I mean, today, PPI throws us into, higher bond rates, lower stock prices. So your energy is even going to get dinged down. I mean, Cleveland Cliffs yesterday, God, it got killed. I'm going to buy more under 15, though. I do like that company under 15. Yeah, Crypto Smith, I like. Listen, I'm not an options player, but I don't think that's a bad move. I think Disney is going to go higher. I don't know if Disney. My guess is by January, Disney is going to go higher, but short term, it could absolutely go lower. Okay, what do I want to do here? We're going to import this. Log in and import. Power earnings gap. Subscribe. So let's say. Click here to open it. This is a watch list. And so Dan has set this up. Essentially, it is a gap. And I subscribe to it. Look at all these watch lists. Look at this. I mean, you want scanning power? Look at this. I mean, these are all pre-set up scans. Pre-set up scans that you can look for. These are great. I mean, this is just amazing. These are mine. 821 cross up scanner. You can look for stocks that. Anchored VWAP, long-term daily bullish candles. Falling wedge, Jake's volume oscillator. It's funny, Jake isn't even part of TrendSpider anymore. I'm pretty sure they had a huge falling out. 10% pullback after 20% rally. Look at that. I mean, look at this scanner. There's your 10% pullback. SES. Open. There's an open door. Oh, look, we have Riot. We have Riot with the upward wedge breakdown. MicroStrategy. Wow, 40% gain in a month. Yeah. But this list is great. These lists. I mean, TrendSpider, such a great tool. Okay, let's see. We've got PPI moving up. Maybe September hike doesn't happen. Read the monkey responses. There's a lot of word on the street about DKNG. I might add to it. Search from Facebook. How do you tell if a stock is a good buy? Oh, here we go. I'm going to move this down. Social requests. I find it funny that somebody joined the private Facebook group and said, hey, how do I listen to your podcast? I don't know where I get people from. The history, by the way, if you're new here, I started a podcast. I built an algorithm in TrendSpider, started a podcast because I was doing it every morning looking for stocks. Podcast kind of blew up. It wasn't 2020. I did it in 2020, but I didn't get, too serious until 2021 because all of a sudden I just stopped doing it. And then all of a sudden in 2021, my friend said, hey, that podcast you were doing, how is it? I logged into freaking Spotify and tens of thousands of people had listened, signed up, asked me where I was, blah, blah, blah. So I started doing it again in 2021. And then last year, did it all through last year. And then in 2023 now, I guess. Let's look up. I'm trying to see if we have a huge mover in the core portfolio. NVIDIA is the only one, and it's down 1.5%. It's better than it was. But it does look like, ironically, some of these stocks are actually coming back. I mean, look at that wedge breakdown. It's kind of clear that wedge break. I mean, you still don't have confirmation there. And here's VOO. I mean, I think you got 406 right at that gap. So we'll take a look at QQQ as well. Yeah. We're going to take that out. Remove all annotations. We got a gap up here, so we got to fill that one on the way back. Back up at some point. I think since you broke that 50-day, I'm really going to look at, let's see. I know there's more long-term holders, but I'm going to pull it here and see where we have we have this volume shelf right here at 362. Yeah, 100% Christian. I mean, this month, listenership is down. Readership, I think, 60% of the people are opening it versus in July, 80% of the people were opening it on a daily basis. It just gets on T-Dog. You're talking about one that I called but should have invested in. I think D-Man actually took the investment. This was the earnings on, where they said, maybe we're just not going to make the cash flow that we think, but we know the products are good. We're going to turn things around, blah, blah, blah. You had this gap. You basically traded down from 32 down to 25. And 27, it got you in, 3% gain. Now you're at 30. Then you're at 35, and you filled that gap and you continued going. So on, I like. It's expensive, super expensive. I mean, take a look at, if we just go to here, the PE is 114, forward PE of 43. It's not a very big company. It's up 108% year to date. It's 3% from its all-time high at 37. The average price target is 35. So Thanks, Christian. I like this one. The problem you're gonna have is that valuation worth rising interest rates, and that can they keep up the growth? They have $1.42. They're making money, so it's not like they're losing money. But clothes and shoes are just one of those things, man. They could turn this around hard. I mean, you look at Nike, for instance. Nike's PE is 33. This one has been floundering here at between 100 and 110 for what, 2 months now? Hasn't moved. They've got cash on hand, $6.99 per share. They've got a $166 billion market cap. Their average target price is 127. They're trading at 109. They're 16% below their 52-week high. Year to date, they're down 6%. So I think if you use On and you wear their shoes and you do whatever. Okay, hold on. Let me see. I got a text about something. Today. Oh, my boss got pulled back to Miami. He's working the Miami game. I thought he was texting me that we had to work in Miami. Anon's just expensive. I mean, that's just the basis of it. Morning, William. I'm gonna read everybody's name that said monkey too. Okay. I'm gonna start the podcast here because it's 9:25, man. I'm gonna be here all freaking day. Let's do this. Good morning. It's Friday, August 11th. It is the day I am 53 years old and 53 years and 1 day old today. So if you didn't listen yesterday, kudos, because we had a secret word at the end of it. And I said, hey, everybody should say monkey. So now the promise is that I would read everybody's name who said monkey. So I'm going to have to zoom in here, and my apologies if I say this wrong. John G. Hoff said monkey. Legitimate said monkey. Joey said monkey. Hogan Von Hulk said monkey. Moody said monkey. Justin said monkey. Chamonix said monkey. And thank you for the happy birthday. Ryan said monkey. Nathan said monkey. Iron Man 213676 said monkey. I hope you ran an Ironman. And I am jealous if you did. I never got the chance. I kept injuring myself when I was training. Yo Mama said monkey. Thank you, Yo Mama. All in touring. Happy birthday and many, many returns. You didn't say monkey, but I'm happy that you wished me a happy birthday. Lucas, you're the man. No, Lucas, you the man. Sean Jeremko, monkey. And B. Malake. Is that what, Key and Peel? B. Malake. B. Lake. Monkey. Thank you guys for all tuning in for Monkey. Thank you for everybody for supporting the birthday, who reached out, who tipped or gifted, as I'm saying for the IRS term. But I certainly really appreciate it. It was a good day. I mean, let's be honest. You know, any day that you get to sit on your ass, eat ice cream and M&Ms, and just pig out, it's a good day. It's a good day. I said yesterday on Twitter or something. I think I said it in the newsletter that I would put out some charts with supports and stuff. I'll do that today. SPY. I mean, I went over it yesterday, and here's a chart that I published in yesterday's newsletter. And if you're not subscribed to the newsletter, it's dailystockpick.substack.com. Get me free in your email box every day. But yesterday I pointed out that the gap that we saw down here, this gap was created by the last month's CPI by July. We just got back to that point yesterday. So if you look at SPY's action yesterday, the morning we saw a move up. And if you'd like to see what a failed breakout looks like, look at TQQQ. And I posted this in the private Facebook group and I think on Twitter yesterday. I may have thrown it on Instagram as well. But look at the morning. This dark black is the morning. And we shot up all the way from about, I think it got just under 40, all the way up to 41.75. And that was at 10 o'clock. At 10 o'clock, you saw this thing just nosedive, down to 39.37. There was no justification for getting in. If you were in, you had to get out here on the 5-minute. If you're trading TQQQ today, you still don't have confirmation. Yes, it's under 40. It closed under 40 at 39.89. You're at $39 right now on the ask. It is below the 9-day. Do not get into this one. And there was a question just before. Do you want to trade UCO? UCO is a triple levered. I don't like trading triple levered ETFs on a Friday. And today is Friday. So just be careful out there. I don't think we're done going down. Today's PPI number more than expected. But here's the thing. The year over year numbers have a 2 handle. So it was 2.9, 2.8%, somewhere in that neighborhood. Yes, it was high, but remember, the Fed's goal is 2% inflation. And what PPI is the cost of goods. So essentially producers price index, that's essentially what it costs to make the goods that are sold to you. And so what that does is as costs go up, then the CPI, the consumer price index, should go up. Well, PPI has gone down faster than CPI. And so CPI, which we got on Thursday, was a little bit higher. What does this mean? Well, it means that producers are not passing on the lower inflation numbers. They're keeping prices higher. And so that's not a great thing, but it's not a horrible thing because eventually the economy will bring those consumer prices down. That's what higher inflation, higher interest rates does. So it's still in question whether the Fed has maneuvered a soft landing, which means that we have never saw lower unemployment or higher unemployment. We've continued at record low unemployment levels. That has never been done in the history where we've gotten back to 2% inflation. So we're not back to 2% inflation. The real question is, does the September hike happen? And right now, I think it's a 50-50 bet. In my mind, it's a 50-50 bet. I think most analysts are saying it doesn't happen, but I think that a sticky inflation number in September might push the Fed to actually do it again and to basically move it down. We are down 0.54% on the S&P. Let's just look. We're down to 0.27 on the Dow, 0.8. Tech's taking it on the chin again. Tech's completely taking it on the chin. SPY and QQQ, I'll put those supports in the newsletter. One thing that I wanted to point out was I am posting on Twitter. I post mostly in the private Facebook group, but I am posting on Twitter. And part of the reason I'm posting on Twitter is, here's an example. Dan Ushman, who's the CEO of TrendSpider, he just put out this new strategy. It's called a Power Earners Gap Scanner. Earnings within the last 2 days, change percentage sum over 14 days is greater than a normalized 14-day all-time return. Price is trading above today's open. Price is trading above yesterday's close. I will include this in the newsletter for you to import if you are a TrendSpider subscriber. If you want to do it, I just retweeted it. You can just click on that link and you basically import it, and you can find stocks in your watch list, find stocks in the S&P, find stocks in the Dow, find stocks in the NASDAQ. There's a ton of things that you can do with this. But I reposted that. So I think going to Twitter might help. And I'm sorry to lead you guys around. The other thing is Humble Trader posted this trading strategy course. I like this. It's an hour long. I watched portions of it yesterday. I like to see that stuff. It's just another strategy video. It's completely free for you to watch. She's not, don't join her paid stuff. Her paid stuff is okay, but I don't think you really need to. But I do like Twitter. So I am using Twitter, and I got to tell you, Threads, I'm done. I mean, I like it. I post it, but I don't think anybody reads it. It's like shouting in the woods, man. Nobody hears you. If you're running naked in the woods and nobody sees you, is that exciting? I don't know. I mean, how do you get your thrills? But one point that I wanted to make, and I've noticed this, is, we've seen oil run up from the 60s here. You can see this chart on the screen on FinViz. Just go hover over crude oil on FinViz and look at that chart of crude oil. Now go to natural gas. Natural gas has not seen the same thing. Natural gas over that period has, this is just today. If we just go crude oil, let's just go crude oil and look at the chart. We'll do, what's this? This is, look at that chart all the way down. And then in July, you saw this run up. Now, let's go back and we can do natural gas here. Let's do natural gas. You haven't seen natural gas go up like that. So natural gas has not participated, but you've been able to trade oil really, really well around the $70 swing point. Right now, you're at 68.31. It's down 2%. KOLD was up. Remember, oil is the triple levered up in natural gas. KOLD, that is the triple levered down in natural gas. You can play these against each other. Do a 5-minute, I used to do a 5-minute swing chart. I'd take 1%, 2%, and I'd take it off the table and go and, play KOLD. If I bought oil or if I bought KOLD, I would buy stuff. Use the 65-minute. I mean, use the 65-minute. Here's the thing. If we run the 65-minute on Boyle, let's see what the results are. Yeah, I mean, you do better. You lose 55% versus losing 90% with just the asset. That's over 8 months. So it can get you in. Look at this. You got 3% here, August 3rd, and you got out August 4th. You got back in on August 4th, and you've made 21% from August 4th, and you're out as of right now. But what does that mean? That means with KOLD, you're doing the same thing. I mean, if you made 21% on that, here, you lost 21% down here, but you're in KOLD at 48.20. It's at $50. That's on the 65-minute. It's good trading. I mean, if you want to gamble a little bit, again, you're just gambling. That's all that is. There is some intelligence in trading commodities like that. Anybody that's listening probably isn't in on that intelligence, but you can definitely do that. I just wanted to point out the main point is that natural gas has not participated in the energy run. It very well might. Remember, we're heading into winter. It's August right now. You're heading into winter. You've got a Ukrainian war. Remember what happened with oil last time the Ukrainian war took off? Russia stopped the Nord Stream pipeline, and the U.S. had to feed Europe natural gas. Well, their reserves are all boned up right now for the winter. They made it through last winter, but last winter was a mild winter. What happens if this winter is a horrible cold winter? Yeah. There's a lot of talk about DraftKings. I have read a lot of articles about DraftKings in particular. They took it on the chin when Penn announced that they have a deal with ESPN. I kind of like DraftKings to pop back here. And when I say pop, I'm not talking a 20, 30% move. I am talking about maybe a 5% move. Right now, you're not in this one. Perfectly clear, you're not in this. You just got out with a 30% gain. You're not in this. This is the 4-hour algorithm. This is, essentially the MACD is down here. You've got the RSI. It's in oversold territory. You're up 1% today. I think this is a name that got beaten up. You're heading into NFL season. If you don't know, on Hard Knocks is on HBO with the Jets this year. It just started. I was at the Pro Bowl Hall of Fame game. That's the first preseason game of the year. Preseason is in play. You're 4 weeks away from the NFL season starting. You know what DraftKings' biggest moneymaker is? The NFL. Betting on the NFL with fantasy football. It'll be huge. So I think DraftKings on this one in a good climate. They had their earnings. There's no catalyst coming up, but I do see that volume shelf up there at 30. You're at 28. I might put some money into this. I like this. Cisco got an upgrade from Citibank ahead of their earnings. They said we could see some upside based on previous earnings from other companies. You're looking at a $52 buy-in back on July 19th. It's at $53.54. You have confirmation. If you like the guidance of Citibank, I don't think it's a horrible one to buy. It's just, we're not in 1996 anymore. Cisco isn't driving the internet. Their equipment's great, and it's still needed. Their PE is 19. It's not super high. I mean, it was better down here at 46. They're making $11.47 billion. They're up 12% this year. That's nothing to sneeze at. I mean, it's not Apple. It's not Amazon. It's not any of the great eights that are up 100% sometimes. But 12% is nothing. I mean, your average price target is 55. You're trading at 53. What's that? 3%, 4%? If they do, push it up, here's July 20th initiated, but it's a $45 price target. Underperform. So I don't want to say I agree with this one, but I do think, look at these sales. I mean, these are all in June. They're, the EVP sold $500,000 worth. The director sold $500,000 worth. The EVP again sold $500,000. I mean, they're putting in pools. That's all they're doing. And they're selling at the $50 mark. I mean, it's not a huge amount that they're selling at the $50 mark. Now, I think their CEO, Charles Robbins here, he sold back in November at $48. He sold $5 million worth. I mean, they were selling down here at $47. I don't think he even believed that this was going to go on, but the recovery has happened. I do think that you reached that $55 price target, and it seems like you might get some upgrades there. Let's see, SWK. This one was downgraded. This was Stanley Black & Decker, and the recession and profit margins are the concern. I think this is one that just ran too much. Look at that. You're $20 in Stanley Black & Decker. I mean, they make drills, and you got a 20% return, but look at it. I mean, this was a pandemic winner, 100%, just like Peloton. Then 2022 came along. You went from 187 down to 73. You popped back up to 90. But take a look at this pre-COVID. Pre-COVID, this was a great stock at 163. It's been taken down. I like the stock. People are buying these things. It's under its 200-day. I don't think that it's a horrible place to be. But do I expect you to get back to 180? Probably not. I would say that when that 50-day does turn positive, maybe we look at this one. It might be back here in the 80s, and you could pop it up to 100. That would be my play for that one. We got a bunch of earnings next week. Let's see. If you're not part of Savvy Trader, I have a trading portfolio there, and I have a core portfolio. If you want to look at the core portfolio, it is basically everything that I think that you should be looking at. What I like about Savvy Trader is we can look at earnings, and we can take a look at what in our core portfolio. So this is just all the portfolios I follow. Here's all of the earnings, and there's a before market and after market. I like this better than the earnings whisper because I don't have to figure out which one's before market and after market. These guys do it right. They put the estimates right next to it. You can highlight it, and it does it. I really, really love this Savvy Trader site. And if you're trading, remember, journal your trades, and this is a free place to do it. But what I like about this particularly is I can go up here and I can go to the core portfolio. And I can see of the 35 stocks that I have in the core portfolio, there's 2 stocks reporting next week. It's Wednesday and Thursday. Target, which I actually like. Remember, good products, good companies with good products, with good management and good earnings. You want to invest in them. This one has questionable management right now. Really questionable management. Previous year, they earned 39 cents, expected $1.45. This one, I just think you go into Target and it's still packed. I still, the target was target. I go to 2 targets, one in East Windsor, New Jersey, and one here in Atlanta. They're both packed. And if I want to, just check out if the stores are packed, I go to one in, where is it? It's over on the other side of Atlanta. Walmart, I spent yesterday, no joke. I got back to Atlanta. I usually spend about $70 a week on groceries, between $70 and $80 a week. I spent $185 on groceries yesterday at Walmart. Don't tell me that these guys aren't going to report some crazy number. Because, outside of just buying that, I had to buy some storage bins as well. So I probably paid, a nice profit margin of 40% on storage bins because I didn't want to wait for Amazon, this cheap stuff. But we have Home Depot, we have Target, we have Walmart, and we have TJX. If I want to go and I want to look at, say I want to look at Kathy Woods, doesn't look like the ARK Invest stuff has. This other guy, Covered Call Strategy, he doesn't have anything next week. If I want to go to Bradley Freeman's, he's got NOX imaging system. That's part of his portfolio. If I want to go to the trading portfolio, there's nothing in there. But if I want to just go all portfolios, we can see next week we've got Rumble, which is a YouTube competitor. We know YouTube did really well. But here it is. TJX is one that I think, you could probably bet on that one too. But Home Depot is a good one. C Limited right here, a data company. Monday, this is a payroll company. I like Deere. Oh, this is a great one. Deere. I actually owned some Deere. I think in my Webull account, I own Deere on Friday. That one, if we go and look at that one, you can see that one has just, we had a nice run in Deere. That is obviously the weekly, and you can see you've still got confirmation going up there. But Deere has run up here in June from 360. You got out with a 20% gain. Got you back in at 436. You're trading at 433 right before earnings next week. I think their earnings are going to be good. Again, earnings is kind of a gamble. I just don't know enough about Deere to think that we're going to see that earnings. The power earnings gap scanner we talked about with Dan. We talked about Boyle. Tesla. I got a question about Tesla. It's still sinking. Remember, I said, hey, I might get in here at 240. I might get in here at 250. I haven't seen confirmation to get back in. I just haven't. The RSI is down at 31. I just haven't seen the confirmation to get there. You got this gap up here hanging between 280 and 288. At some point, we fill that gap. If you look at the long-term one of this one, it's just pulling back a little bit. It's not crazy to think that we get down here to this 200-day. You got to get through the 50-day at 211, and then you get to the 200-day at 200. But if you go below that 200-day, I've said it before, when you go below that 200-day on Tesla, get in because you're in for a good ride afterwards. I think, full self-driving was crazy good on my drive back. I can't imagine driving a car 15 hours without full self-driving. Even though I had to stop 6 times to recharge, I can't imagine buying a car without full self-driving. If you follow cars, what was it, Cadillac, the Escalade. I think they just announced the new Escalade or something that was battery. Yeah, it doesn't come with CarPlay. GM is releasing a $130,000 base model. So that means that when you start putting upgrades in, you're paying $150,000 and it doesn't come with Apple CarPlay. Who's buying that car? Morons is who's buying that car. You're going to go for something else and you're going to get a secondary, computer system that has Apple CarPlay. So, or you just go with Tesla Cybertruck or something else. But again, Tesla, you're out. TQQQ, you're out. You're at $38.95. Like I said, this is a triple levered ETF. I thought you could buy it under 40 a couple days ago. You did get a nice little pop. If you're watching the 5-minute chart, remember, these are trading stocks. These aren't investment stocks. So $38.98, You're under the 200-day here. I think this is going to be a good buy because I think we're going to pop back up. I just think this is a healthy pullback in a market. I think we're going to be at a trading range probably till October and maybe November. The market right now is assuming some point in time we get some pullback from the Fed, meaning that they reduce rates. That's it. Search from Facebook. How do you tell if a stock is a good buy? Well, if I told you that, I'd be giving away every secret. Honestly, Search, it's good companies with good earnings, with good products and good product profits and good management. And how do you find that? Well, half the time you have to do a ton of searching and reading. The other half of the time, just look at the products that you use. I've got a MacBook Pro. I've got a iPad Pro. I've got an iPhone, and I've got an iMac. I've got an Apple Watch that I'm on. I do have AirPod Pros. That's why Apple's the biggest thing because they're going to release the iPhone 15. My belief is the iPhone 15 is no better than the iPhone 13, but I'm going to upgrade to the iPhone 15. Simple as that. Look at the products that you use. Do you travel? And when you get to the airport, do you use Uber? Look at this stock. If we traded this one on the 65-minute, you're back in. Let's see, on the 4-hour. I don't think it's gotten you back in on the 4-hour. I think it got you out after that earnings drop. I'm looking to get back into this one. I do hold a small position. I want to hold it for a long time. So I'm looking for an opportunity to get back into it, but I'm waiting for some confirmation. That MACD is down. The RSI is down. I don't think we're done going down, so I'm not putting my money into it. But how do you find good stocks? Part of it, the first place I would go is I would go to Savvy Trader. This may be pumping myself up and just saying that these stocks, go to the core portfolio on Savvy Trader and look at those stocks. They're good companies other than Moderna, mRNA. This is a trading stock. That's the only reason I have it in there. And I haven't put Eli Lilly in here, but I have to put Eli Lilly in here, LLY. But these are good companies, and if you held this, then I think you'd be doing well. Now, again, this is an equal weighted. This is not my portfolio. I think we went through this yesterday. I own everything except for 3 of these stocks. And I like these. I think they give you a good roundabout thing. It does beat the S&P. It does beat the S&P. So let's see. I think I can. No, I guess I can't. It does beat the S&P long term. And there's a way to do it, but I just don't know. But it does beat the S&P. So, the trading portfolio down 4.21%. But again, how do you tell if a stock is a good buy? If you're having trouble finding stocks to buy, then you really probably need to understand PE and understanding some of these fundamentals here. I would tell you, forward PE, go to Investopedia.com. If you go to FinViz and then look at these numbers and you can compare them, like we go to technology here. We just go to technology and let's sort it by PE. Sort it by PE where, look at this, 7,321 PE. That's crazy. 4,000 PE. That's super high. Look at NVIDIA. NVIDIA shows up here on the top 17, top 20. That's a crazy PE, but you know what? They're going to grow into it. So am I worried about my 466 buy? No, I may do some tax stuff. By the way, this weekend's paid newsletter will be about taxes and different things. I am not a tax advisor. I will make that perfectly clear. But I think it's important. I get a lot of questions about this, and I think it's important to understand your tax situation. So Search, I would say listen to this podcast is a good start. How do you tell if a stock is a good buy? Listen, there's tons of people who will pay, you could pay to tell you that a stock is a good buy. I think it's about doing your own research and understanding, the company, the products, the profit, the margins, the future, the management, and just things of that sort. When you understand that stuff, you can try and find companies that are good to buy. Trenton from Facebook wants me to look at CLS. I don't even know what CLS is. Let's look. CLS is Celestica. I'll have to look at this one in FinViz to see what they do. Let's see what they do. Technology, electronics component. It's a Canada, $2 billion, so it's a micro cap. Looks like a ton of upgrades here. Average price target $22, and it does look like that's probably a good one because they're pushing it up. Provides supply chain solutions in North America, Europe, and Asia. Operates through advanced technology solutions and connectivity, cloud, and solutions management. The company offers a range of product manufacturing and related supply chain services. So it's supply chain, it's technology. It's gone crazy. It has absolutely gone crazy. It's doubled. Year to date, it's up 85%. But here's the 4-hour algorithm. It got you in at $11 here. $11 back on May 5th, Trenton. I mean, listen, if you got my algorithm in TrendSpider, you're doing really, really, really well. They just announced earnings. This was 47 cents. This was 55 cents. Are they making money? They are making money. Their PE is 15. Not crazy. I mean, that's not nuts, but it's a micro cap. So understand that this may have a cap of PE and it may have a cap of growth. But it does look like 11 and you're at 20. And if you get to 22, you doubled your money. Personally, I think you're more likely to cover this gap down here between 18 and 19 because you're seeing the MACD fall. You're seeing the RSI come down. I think the upside on this one is limited. I think the downside is much more. If we take a look at a long-term one on this one, I mean, it's in that uptrend. You like the 9-day, the 21-day, the 50-day, and the 200-day all moving up. The Bollinger Bands are expanding, but you're outside those Bollinger Bands. Typically, when you're on the upside of those Bollinger Bands, the run needs significant catalysts to continue. The algorithm doesn't do as good as buy and hold. The algorithm, 75% over 2 years. Buying and holding made you 138%. If we look at the 65-minute, and we run it on this one, let's see, you've made 86% versus 89% just buy and hold. So I don't think there's an algorithm that's going to outperform on this one. Right now, you're out. It doesn't look like you're in. And again, that gap, that earnings gap shows up between 18 and 19. I'd probably say be patient. That would be my guess on this one. With those run-ups, you're seeing it in every other thing in the stock market. When they announce earnings, if it's not perfect, they're just going down. So I'd be a little bit careful on that one. It might be just a little bit too hypey for me. Now, one that's not hypey for me, we're going into scans, is Sedge. This one, good God. Thank God it was only a couple $1,000s of my money. I'm down 40% on this one. I bought up here at about 270 something. I followed this 251. I got up here. I should have sold when it got to the 200-day as resistance. Then it tanked on earnings. I do think at some point in time we fill this gap up to 238. 177 is the buy-in. I don't think I would buy in right now. I am not buying in. I am waiting for confirmation over that 9-day. So the algorithm, it got you in, but it doesn't look for confirmation. Visually, I need confirmation. This is why I don't want a bot. I don't trade on bots because I want confirmation. That's the first one. Second one, we talked about this yesterday, is Schlumberger. Schlumberger. I don't know how to say it. I think that's what it is. But it got you back in here. It's a secondary cross-up at 59. I don't think, listen, this is all-time highs, I think. Yeah. I mean, you're getting back up there. The 200 days just turning positive. Your 50 days positive. Everything's positive. You have confirmation. This is one that I probably would get into because, again, it's technology in the energy field. I think you're fine. Energy transfer. This one's interesting based on the insider buys, and I've brought this up plenty of times before. But Energy Transfer, they paid their dividend, and you just got shot down. 1277 is where it's trading. 1307 is where you have the MACD cross up. The RSI is falling down. This one, if we go over to FinViz, we look at energy transfer, go down here and you go to the insider buys. Look, it's all buys. They're all buying at $12, and it's not small boy stuff. This is just since December and May. I mean, this dude's buying 40, 50 million bucks. Warren Kelsey, executive chairman. They're buying a ton of stock. Hold on one second. I got to take my dog's Thunder shirt off. Okay, we're going to take your Thunder shirt off. Now I'm going to take this one off. Okay. There you go. It's not thundering anymore. Love you. You can go about your way. But yeah, energy transfer, I like it. I like this one. I may add this one to my energy sector. Sometimes you don't want to add the energy sector, but when you take a look at that trend line up there, I mean, 1351, if you go from 1280 to 1351, you're doing pretty well. It doesn't have a bad, it's got a 9.69% dividend too. So holding on to that one, they're doing pretty well. I like that one. XLE. XLE is the energy spider sector. This one, secondary cross up. We talked about it having this huge run. 79 back here in June. You're at 89 right now. Secondary cross up. We talked about Cisco. Getting that upgrade. You do have a secondary cross up on Cisco right before earnings. It's been a bit of a hype. You're going from 52.15. You're at 53.69. Not crazy, but this one doesn't move much. I mean, this doesn't have a lot of volatility like a lot of others. We talked about Honeywell yesterday. They have a cross up, and that was at 188. So Honeywell. Verizon has a cross up. Marriott. I'll put all the cross ups. All the cross ups are scans, so you can look at it in the newsletter. Marriott's an interesting one because this one has been on a run too. 177, and you're at 207 right now. And if we look at long term on Marriott, you're at all-time highs. All-time highs, breaking out of that wedge. Look at that run that Marriott's on. Talk about travel being huge. I mean, Marriott can put a $600 price target or a price on a room, and they'll get it. I just got back from a Marriott in Washington, D.C., and we paid for it on Hotels.com. Then you get a resort fee on top of that. So you pay your Hotels.com, which is like $400 per night, right? That's about what it was. Then you get a resort fee. My resort fee for 5 nights, no joke, $340. That's the resort fee on top of the normal stuff. That didn't include food. That's just, hey, we know you stayed here. And no, I did not allow anybody to clean my room. No, I did not. I had the do not disturb sign on the entire time because I cleaned my own room. But yeah, they're making boatloads of money. BMY, Bristol Myers, they have a cross up. This one's a little bit sketchy just because Bristol Myers has been a falling knife. I mean, they just don't have the drugs that like Eli Lilly and those guys do. So I'd be a little bit careful of that one. Southern Company. This is like Duke. This is for Walter in his rocking chair. Southern Company. And finally, AMT. This is American Tower. This one is part of every REIT that you can imagine. 187.63. It's been kind of killed down here. It's under its 200-day. If you look at the long term of this one, it's kind of got that falling wedge. You're just looking at 178 as the support. I'd be a little bit careful of this one. It does have a very good dividend from what I remember. Not like the 10% like energy, but it's 3.37. It's down 11% year to date. Average target price 233. Nobody, there's not a ton of coverage, but July 13th, BMO, price target of 230. March 30th, Moffitt-Nathanson, price target 234. So there's your scans. If there are links that you don't know that I did today, that I said today, and you just don't know it, I had a question on how do I listen to your podcast? Well, you just go to Linktree, linktr.ee/daily stock pick. Simple. It's got every link that you need. All the charts that I use, TrendSpider, right there. 25% off. Visible, get $20 off your phone service. Webull. I love Webull. You can look down below for Webull. There's links down below for Webull. I love them. Savvy Trader, I talked about it. Savvy Trader is right here on my link tree. You have the Facebook group, you have Twitter, you have Instagram, you have YouTube, you have Twitch, you have Spotify, you have Apple Podcasts, you have Venmo to tip me. You have email. So if you don't even have social media, you can just email me. Then you have Substack. And all of this stuff down here, you can find links. You can tip me. The newsletter is down there. Linktree, linktr.ee/dailystockpick. Yeah, and the newsletter. I mean, those are the two places, dailystockpick.substack.com. And if you have any other questions, hit me up. I will be back on Monday. Again, tomorrow's paid newsletter is going to be about taxes and how you trade in certain accounts like a Roth. How do you trade in an HSA, healthcare savings account? How do you trade in an IRA versus a brokerage account? And what are the tax implications of those things? So I'll try and do that. But if you have any questions, hit me up. Take care. Have a great weekend. And again, thank you guys for all the birthday stuff. I really, really appreciate it. Have a great weekend. And let's hope we don't lose a ton of money today. Upstart's back up. Nvidia's still down. Okay, take care. See ya. Gunner, PRFT. Let me just export this real quick. Export song to disk. I thought the tax thing would be good for probably a good amount of people. People don't realize that the U.S. tax system is based on a marginal tax rate. So, when you claim tax the rich, a lot of people don't even know what that means. PRFT. Let's look at PRFT. What is PRFT? Proficient. This is one of those small ones. Oh, their earnings killed them. You got a nice gap there between 89 and 83. But those earnings downfalls, oh God, it's $2 billion. You're not going to find information on this. July 28th, downgrade Scotiabank $70 price target, downgrade $70 price target, downgrade on February, $81 price target. So it looks like 10 oversold stocks to buy. Let me see if this has anything about Proficient that I can see. 10 oversold stocks. Let's see. Let's go down to Proficient. Is a consulting company that provides supply chain automation, change management, and other services. Second quarter earnings missed analyst estimate by a wide margin, leading JP Morgan and Scotiabank to downgrade after digging through 943 hedge funds for this year's first quarter. Insider Monkey discovered 21 had invested in the firm. Proficient largest shareholders are Database in Ben Morgan's capital, courtesy of $46 million. Driven Bands, Proficient, and Permia are some top oversold mid-cap stocks. Let's see what the insiders are doing. Insiders are buying at 76, but it's tiny. The May 10th, when the president sold at 72, he sold 722,000. And in March at 72, he sold $715,000. That's $1.5 million. That's a lot for a mid-cap president and CEO. I mean, he sold twice in the year, both $715,000 and $722,000. That's a lot. I mean, he sold $250,000. Am I buying into a company where at 72 he sold and it's at 59? There's something he knows that we don't. I mean, it's a consulting company. There is absolutely something he knows that we don't. So, yeah. Gunner, I'd be careful. I'd trade it. I wouldn't own it. I think PFRT, I think you may be in for a bounce there. I mean, try the 65-minute algorithm. Let's see. Let's see if it got you back in, because it does look like it's putting in a floor there. Yeah, 60. But see, here's the thing. I mean, you've lost the last 4 trades on this. But I will tell you, over 8 months, Gunner, this 65-minute algorithm makes you 23% in this stock. If you just bought and held this stock for 8 months. For 8 months, you make 23%. If you just bought and held for 8 months, you've lost 17%. So this algorithm works on this stock. You're in, but those last trades, I'd probably wait to see before you have a winning trade on this 65. If you have TrendSpider, you can get this one, this 65-minute algorithm. But I would wait for it to give me a hint that this kind of slide is over. Because that 200-day is moving negative. The 50-day is still moving negative. The 9-day has kind of flattened out, and the 21-day has flattened out. So I'd worry about it. And John, I like Walmart. I own Walmart. I don't have a super large position in Walmart, but I have a decent position. And we're talking 5 figures. I'm significantly down on, not down, but this is funny. My boss doesn't want to burden me with going to Miami for a Messi game. But Walmart I like. Here, Walmart. I mean, the problem is you've run up on Walmart a lot. The 4-hour algorithm, by the way, makes you 17% over 2 years versus just 7% in Walmart. So the 4-hour algorithm on this one actually works. It's a great company. I would have no fears about buying in. You are buying in at this topped out at, let's see, 160, and you're trading at 161. This run topped out at 152. So you're not double topping it, but you're damn close to double topping it if this one gives up next week some of this run. I mean, the RSI on a weekly is at 64. You were under the 200-day here back in June at 121. Dude, if you're not buying Walmart when it dips under the 200-day, what are you investing in? Walmart's been a good one. You're not even playing the game. Okay, let me move you over to Active Trader Pro, where we can see TQQQ is starting to turn around a little. It's back at 39. We'll load you up over there so that I can upload this. Oh, and I need to get I found out. So this is how good Apple Silicon is. I have an M1 MacBook Pro. And essentially, my MacBook Pro, my iMac took 40 minutes to process the hour-long video that I edited in the iMovie yesterday. The MacBook Pro did it in 10 minutes. And this iMac, by the way, let's see. It's a 2017 27-inch 5K iMac. The problem is it's got a 3.4 gigahertz quad-core Intel Core i5. Graphics is Radeon Pro, 4 gigabytes. So it doesn't handle things very well. It does have 40 gigabytes of DDR4. So I souped this one up with the RAM. But it will no longer get updates. It's 2017. That's crazy. I mean, name a PC that you can still reliably work on. Oh, Connolly Ed. I missed you. I missed you, Connolly. Connolly said monkey. We had a bunch of responses yesterday. Thank you, guys. Podcast 810, 811. We're going to do this. Let's go over here. My internet is so good. AT&T fiber is so good. It's so fast compared to my parents' Verizon Fios. Let's see, we're going to go down here to my notes, copy, paste, and we'll say ET. Okay, let's just put this in. And we're going to schedule it now. And no. And then we're going to insert ad break. 1. Okay. Done. Next. Publish. Then I've got to get my MacBook. You know what? I think I'm going to do this on the couch. It's 10:15. I'm going to write the newsletter. Hopefully, Gunnar, you got your answer on PRFT. Let's see. I'm going to pull down this. And I'm going to move this over. Share. We'll move this over to AirDrop. And we're going to move it to the iPad Pro. Not the iPad, the MacBook Pro. Sending. And then I've got to open up in Finder. I'm going to take all that. this over there. Move to trash. Okay. I'm going to say done. We're done with that. We're done with that. And okay. I am out of here, guys. Have a great weekend. I'll talk to you later.